EzSMC is officially live if you're watching this video right now. So I'm going to be going through exactly what we've added to the V1 of the EzSMC, some new updates and tweaks that we've done, and how you can use it to profit in the markets. Now, this is our very own smart money concepts indicator. If you're not used to trading smart money concepts and you still trade retail strategies, that's fine, but don't try to jump straight into this indicator, setting blind limits at order blocks, right? You really need to have a good understanding of market structure, of price action. And that's what we've tried to do in this indicator, give you an all-in-one smart money concepts indicator, an all-in-one price action indicator to help you identify where the volume is in the market, where the buyers and sellers are, help you easily identify the market structure, etc. So once you load in the indicator, this is what it will look like right here. Now, the first thing you'll notice is that we've changed some of the colors. We've made it this really sleek grayish color here for the market structure and for the order blocks. And of course, we've added our own easy algo colors to the order blocks, which looks very, very nice. Now let's come up here into the settings and we'll go through each individual input. So first, right, the order blocks. This is probably the bread and butter of this indicator. I know a lot of you guys trade order blocks. We've actually tweaked the code a little bit in the V1. So our order blocks are a little bit better than the ones in the beta version, and we fixed all of the bugs. So you should be able to backtest this indicator with no problem and no study errors. And the order blocks are as accurate as you can get, right? We have many different mitigation methods as well, which I'll jump right into. I covered this in the EzSMC beta video. But as you can see here, right, we had this order block, strong move down with displacement. Price comes back up to retest that order block, gets rejected from the midpoint, and then price goes down. So in this case, that would be your basis for entry. Maybe on a lower time frame, look for some other confluences, stop loss above this swing high, and then you're going to target the lows here, right? Target this liquidity down here for a nice 4.63 risk to reward ratio. So the great thing about trading our order blocks is that your risk to reward ratio is going to be very high most of the time, right? For the most part, you're going to have a risk to reward ratio of above 3, meaning that if you're risking $100, on the other end, you're going to be profiting $300, which is a very solid risk to reward ratio. Now, as you can see, we have the chart timeframe order blocks with multiple different mitigation methods. I'd recommend using the Wicks or the touch mitigation method. But as you can see, when we change the mitigation method to touch, we've actually removed this order block here because we've already tapped in to that order block. So as soon as a candle touches the order block, it's going to be mitigated. Now, I'd recommend choosing either that or the Wicks, meaning price has to wick through the order block for it to be invalid. I'm not a fan of the close, all right? I don't use the mitigation method of close. Some people do, right? Essentially what this means is that price has to close outside of the order block for it to be mitigated. If an order block has already been tapped into and hits the midpoint, like that would be a mitigated order block in my opinion. So by default, I think it's on Wicks, but you could use either touch or Wicks. Now we also have the max order blocks. It'll show you a maximum of 10 order blocks. We also have the hide overlap feature, which I definitely recommend keeping on. You don't want to see overlapping order blocks. Then we have the multi-time frame order blocks. So for example, let's go to the 12-hour because I want to show you guys the multi-time frame order blocks, which I'm super, super excited about, right? So as you can see, it shows the actual time frame, right? 12-hour, the volume, and we can increase the max order blocks on this to 10 as well if you wanted to see some more order blocks. When you have overlapping order blocks, what you can do is go to a lower time frame and look for other confluences to enter a trade. Now below that, we have the market structure, right? We've changed this to this very nice grayish color here. The market structure is essentially the break of structures and the market structure shifts. Now, we also had a ton of requests to add the equal highs and lows, which we have added. Essentially, it shows you stop hunts, right, where there's liquidity in the markets. I don't personally use this, but this was a highly recommended feature that we've added to the market structure. And then, of course, the swing points, right, to show the higher high and the higher low. I think most of you guys probably don't need to toggle this on, but it's there if you want to as well. All right, so these are our very unique proprietary fair value gaps, right? We've made this very sleek looking box with this midpoint here to help you easily identify where these are on your chart and only show the strongest fair value gaps. So we actually have a filter to only show the strongest ones, right? The largest fair value gaps. And again, we also have multiple different mitigation methods. Something else we've added to the fair value gaps, if the mitigation method is set on wick or close, is we've added this nice shading option here. So this shows you exactly how much has been filled. So you can see we haven't tagged the midpoint of this fair value gap yet, meaning that this would be a potential trade opportunity, right? Grab this liquidity down here, sweep the lows, tag that midpoint of the fair value gap, and then start to see a move to the upside, maybe tagging this bearish order block, bearish trend line, and then look to flip short right here, targeting the next order block. So this helps you create trading ideas in advance, really giving you guys all of the key levels that you will need if you trade smart money concepts. And I love the fill option on the fair value gap to show you exactly how much of the fair value gap has been filled. Most of the time, fair value gaps will get filled, and you can see just how well price respects these fair value gaps, right? We see this strong move upwards. We have this fair value gap. I'm sure we've had a key fib level here as well. You can see there was liquidity in this area, which we swept below, tagged that fair value gap right here, and then saw that move to the upside. All right, next we have the liquidity levels. So you guys know I love my swing failure patterns. I love to trade liquidity to liquidity. So we've added these very nice liquidity levels, again in this nice gray color, to show you guys where the liquidity is in the market. We've also added an option to show the previously mitigated liquidity levels to see exactly how well price respected these levels in the past if you choose to do so, but personally I like to keep that off. Then we have the key levels. You guys already know I love my key levels. We have the 4-hour, daily, Monday, weekly, monthly, quarterly, and yearly levels with this nice abbreviation toggle right here. If you don't want to show all of that text, looks very, very nice. I know a lot of you guys trade with key levels. You can actually be solely a profitable trader with these key levels alone, right? Trading some weekly ranges, trading the Monday highs and lows, etc. Below that, we have the session levels. Again, the London, New York, and Tokyo session high and low. If you guys trade Forex, I'm sure a lot of you guys will like this new feature. And last but not least, we have the premium and discount zones. So this shows you where price is overbought and oversold. As you can see, we're at the discount zone currently, meaning that it would be a good time to look for longs. It doesn't mean you should just blindly enter a long position, but that in this range here, right, in this range that we have been trading in, let me get my 0.5 fib out, we're currently at the bottom of that range, right? Below the equilibrium, below the premium zone. Price is at a discount, meaning this is where you want to look for long positions. And also the equilibrium gives a great place to look for trades as well. You can see that price has consolidated roughly around this equilibrium. So that tells me if price were to bounce from the current discount and head back up to the equilibrium, we can look for a short position somewhere around there, or maybe another move up, tag that order block, and then come back down. So I just wanted to show you very briefly in this video our new updates. Stay tuned for some strategy videos coming soon on how you can use this indicator to your advantage and trade the markets like a professional, right? The goal of our indicators is to take away the guesswork, remove your emotion, and give you a system crafted from algorithms that work. So be on the lookout for a ton of education to come in the near future. That's it from me. If you guys have enjoyed, leave a like on the video, subscribe to the channel for more trading content, and I'll see you guys next video.